International Mining Symposium coming this weekend, Sunday, November 30th in London, England. What a lineup. Pierre Lassonde, Rick Rule, Ross Beatty, Rob McEwen, Robert Quartermain, Philip Mackey, Clive Johnson, Renaud Adams, John McCluskey, Mark Cutifani, Minister Stephen Lecce, Minister George Pirie, Donovan Pollitt, Neil Jacobson, Diane Weber, and Paul Carter. Just to get you started. So it should be quite an event. I fly off on Saturday, so it should be exciting. So hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. Lots to get through here. It's really a matter of choosing the most significant articles I can find in terms of what is moving us ahead in this narrative. And this is the top. West scrambles to fill heavy rare earth gap as China rivalry deepens. I've been discussing this for months. The whole rare earth discussion has been oversimplified. When we hear, 90% of rare earths come out of China, actually, when we're talking about heavy rare earths, oftentimes, depending on the rare earth, oftentimes it's 100%. 99.8% we'll often see. So this is becoming a big deal, and we have a story here from Eric Onstad at Reuters discussing it on November 19th. The West's push to build a homegrown magnet supply chain to reduce its reliance on China, led by massive U.S. backing from Nevada-based MP Materials, is running into a critical problem: the scarcity of so-called heavy rare earth elements. And you have to give James Dines, now deceased, newsletter writer and legend, full credit. He was talking about the heavy rare earths back in 2010 and how important they are. And for those that remember that, whatever happened to Tasman Metals and the Norra Carr deposit? This was a heavy rare earths deposit in, I believe, Sweden. Now, interestingly, I've seen no stories on it. So let's continue this discussion on heavy rare earths from Reuters. The United States and allies have been scrambling to create an alternative supply chain to make super strong rare earth magnets, which are vital components in everything from defense technology and electric vehicles to electronics and wind turbines. MP Materials aims to integrate the entire supply chain from mining rare earths to magnet production and has ambitious plans to produce magnets within years, buoyed by a July deal comprising billions of dollars in U.S. government support. It trumpeted its success earlier this month, boosting processed output of 2 light rare earths by 51% this quarter. One wonders what that is in kilograms. But shortages of heavy elements dysprosium and terbium could be an Achilles heel for MP Materials and the West's campaign to forge a magnets industry away from geopolitical turbulence that has constricted supply from China, analysts say. MP's Mountain Pass mine in California contains only traces of those 2 elements, which are used in small quantities in the magnets but are vital. Dysprosium and terbium help magnets retain their magnetic qualities under high temperatures, such as in EV engines. Quote, MP Materials may have a formidable challenge. They'll need to go to Brazil or Malaysia or some African states to find those resources, but it can take a lot of time, said Ilya Epkin, senior principal with consultants Arthur D. Little. And Ilya has been on the show, so we'll have to bring Ilya back here. Now, in the Reuters article, in an analyst conference call on November 6th, COO Michael Rosenthal said MP was, quote, actively engaged with a number of potential feedstock providers for heavies, but did not name them. Another source of feedstock will be recycled materials supplied by Apple that contain heavy rare earths under a $500 million deal for MP to supply magnets to the tech giant. Quote, we believe we are very well positioned, MP's Matt Sloester, Executive Vice President of Corporate Affairs, told Reuters. MP is a high-profile example of the impact of continued dependency by the West on China for heavy rare earth processing. According to consultancy Benchmark Mineral Intelligence, the West will still rely on China for 91% of its heavy rare earths needs by 2030, down only slightly from 99% in 2024. So, if everything goes according to plan, we'll be down to 91% reliance on China by 2030. That is according to Benchmark Mineral Intelligence. That is quite something. Now, there is a price disparity here as well that is worth noting. Scrolling down, the scarcity of heavy rare earths outside of China is evident in the price of dysprosium oxide in Rotterdam at $900 per kilogram, more than triple the price in China of $255, according to data provider Fast Markets. Quote, if you talk about critical resources, it's really the heavies, All the rest we will get, said Eric Eschen, CEO of Germany's Vacuum Schmelze, or VAC, one of the few rare earth magnet producers outside China. VAC has been busy inking deals with miners that produce heavy rare earths to supply its new U.S. plant in South Carolina that recently opened. VAC has agreed supply deals for heavy rare earths with Canada's privately held Torngat Metals from its Strange Lake project in Quebec and Aclara Resources from its Carina project in Brazil. Quote, even with limited capacity in the West, we're succeeding at securing the capacity we need, Eschen said. Magnet production capacity outside of China and Japan is expected to hit 70,000 metric tons a year by 2030, which would need 1,650 tons a year of dysprosium oxide, according to critical minerals consultancy Adamas Intelligence. Quote, heavies are definitely the next piece of the puzzle that needs to be dealt with to unlock widespread Western magnet production at scale, said Adamas Managing Director Ryan Castillo. Despite the flurry of recent deals and rhetoric in the West, mines outside of China are forecast to meet only 29% of heavy rare earths consumed outside of China in the auto and wind sectors by 2035. According to data from London-based commodity consultancy CRU. Quote, to close this gap, more mine supply will be needed with costs higher than the current supply base, said Piyush Goel at CRU. Now, it also discusses Lynas and how MP Materials and Lynas both lack heavy rare earths in their deposits. The two biggest Western firms in the sector, MP Materials and Lynas Rare Earths of Australia, are both looking for additional ore to process since their own mines are not rich enough in heavy elements. Lynas kicked off heavy rare earth separation earlier this year in Malaysia, and we're going to have another story on Malaysia coming up next, becoming the world's first such producer outside China. So Lynas is separating heavy rare earths in Malaysia. The Australian group announced last month it would expand output of heavy rare earths to 250 metric tons of dysprosium and 50 tons of terbium a year, but gave no timeline, saying it depended on regulatory approvals. CEO Amanda Lacaze told analysts on a call on October 30th that Lynas planned to source heavy rare earths both from its Mount Weld mine in Australia and from Malaysia, where its processing plant is located. Quote, we have a team whose job it is to work with various Malaysian partners on that development process. This contrasts with a global deficit forecast by CRU by 2035 of 2,920 tons in the supply-demand balance of dysprosium and terbium oxides. So they're looking to make 300 tons per year with no date on it, and by 2035, we're going to need 10 times that much. At least that's the global deficit. Another Australian company, Iluka Resources, is building a refinery at Eneabba in Western Australia that will eventually be able to process up to 750 tons a year of heavy rare earths. It is expected to be commissioned in 2027. Scrolling down, MP Materials Mines produces mainly light rare earths with its deposit containing less than 1.8% medium and heavy rare earths. MP said it has stockpiled several hundred tons of medium and heavy rare earth concentrate in preparation for magnet production, but this only contains 4% dysprosium and terbium, according to the company's website. Some companies, including VAC, have produced magnets without heavy rare earths, but they have limited applications, such as slow-moving wind turbines, said Eschen of VAC. Quote, the moment you go into other applications, for example, a motor for EVs, turning very fast, going 120, 140 degrees Celsius, then you need the heavies. So quite a story from Reuters. And the update on Malaysia is next. This is the Washington Post. U.S. rare earth ambitions center on Malaysia. But China's already there. So this is where Lynas's rare earths plant is. So this is Rebecca Tan and Christian Shepard. In their quest to break China's chokehold over rare earth metals, the United States and its partners increasingly see an answer in a 15-year-old processing facility in central Malaysia. The only major rare earths refinery outside China, it is operated by Australian firm Lynas, financed by a Japanese state-owned company, and will soon add a South Korean-developed supermagnet factory next door. It represents the kind of allied joint venture that Washington wants to see replicated across the world to weaken China's grip over processed rare earths, which are needed in everything from missiles to pacemakers. China controls 70% of rare earth mining and 90% of processing, with near total dominance over processed heavy rare earths such as dysprosium, which are critical in defense technologies. So the heavy rare earths are finally moving into the spotlight, and This subtlety is finally moving into news articles that not all rare earths are born equal. The U.S. is pouring billions into rare earth capabilities on American soil, including financing a new Lynas plant in Seadrift, Texas. But progress on these projects has been halting, with Lynas saying in August there is significant uncertainty whether its Texas plant will go ahead. Consensus is growing in Washington that bigger, swifter strides could be made in creating trustworthy supply chains abroad. The Lynas refinery in Malaysia is a, quote, torchbearer for this approach, said David Merriman, a London-based research director at Project Blue, a critical minerals consultancy. Since 2012, the industrial complex in the forested state of Pahang has been taking in light rare earth ores from a mine in Western Australia and separating them into elements needed in products like electric vehicles and wind turbines. Scrolling down, we have a quote from Danielle Heineke, Australia's High Commissioner to Malaysia. Quote, Malaysia's got really good capability now in its people and in the supply chain to play a part of global processing capability. And then we see a chart. So Malaysia is basically the next best rare earth refiner after China, which you see at about 92%, and there is Malaysia at about 4%. During President Donald Trump's visit to Kuala Lumpur last month, the U.S. secured commitments from Malaysia to grow its rare earth sector in partnership with U.S. companies and not to restrict exports to the U.S. of rare earth products. Now, we were seeing earlier how China was in Malaysia and they were talking about helping develop their rare earths processing technology. And then later, we saw Donald Trump on his Asia tour stop by Malaysia and make a critical minerals deal. And I asked, how does this work? Is China going to give their technology to Malaysia? And then Malaysia is going to sell the rare earths and the technology to the U.S.? How does that work? And as you see here, American investors are flocking to Malaysia to examine what Lynas has done. The Defense Advanced Research Projects Agency, the innovation arm of the U.S. military, recently dispatched experts to assess what kind of tech could be useful. So I'm back to how does that work? Well, we have an answer. But these ambitions will not go unchallenged. China's leaders have spent more than a decade entrenching their influence in Malaysia's rare earth sector, pressing Malaysian miners to funnel ores to Chinese refineries and, in some instances, intervening directly to ensure they do not flow into competing supply chains, according to U.S. and Malaysian officials, as well as people working in Malaysia's rare earth sector. Some spoke on condition of anonymity because they had not been authorized to discuss the sensitive industry. Recently, Chinese suppliers stopped providing spare parts for Chinese-made machines in the Lynas facility, forcing the company to build more expensive alternatives, these people said. Lynas did not respond to requests for comment, but the company's chief executive, Amanda Lacaze, last month warned that Chinese constraints on equipment were already starting to inflict cost penalties. China's Ministry of Foreign Affairs and Commerce did not respond to a request for comment. And so, how is Malaysia playing this? We have an answer. Malaysian leaders stress that their recent deals with the U.S. do not preclude cooperation with China, including ongoing negotiations for a Chinese refinery here. While Lynas has signed an agreement with the Malaysian state of Kelantan to explore its rare earth deposits, the Chinese state-owned company Xiamen Tungsten has signed a similar deal with the state of Kedah. So they are not taking a side. Quote, we are not trying to build an alternative supply chain, Tengku Zafrul Abdul Aziz, Malaysia's investment, trade, and industry minister, said in an interview. Quote, alternative supply chain means we want to allow non-Chinese to compete with the Chinese supply chain. No, we are inviting the Chinese to come here as well. And finally, in 2022, a mining company jointly owned by Malaysian and Chinese shareholders, MCRE Resources, set up shop in the state of Perak. MCRE was the first in the country to use Chinese-provided tech for, quote, in situ leaching, a method that has been shunned by many Western miners because it involves pouring chemicals directly into the ground. Malaysian officials initially asked MCRE to send its ore to the Lynas facility so processing could be done domestically, said Nick Nazmi Nick Ahmad, who was serving at the time as Malaysia's Natural Resources and Environmental Sustainability Minister. But, quote, they got a call from China saying that's not going to happen, Nick Nazmi said, and that was it. According to MCRE disclosures to investors, all of its product has been sold so far to Chinel Co. Guangxi Nonferrous Rare Earth, a subsidiary of the state-owned China Rare Earth Group. When Malaysia imposed an export ban on rare earth ores last year to spur downstream investment, MCRE was given the sole exemption to continue exporting to China. So it sounds like Malaysia, to a certain degree, it's to a certain degree in China's pocket. Scrolling down, virtually all equipment and chemical inputs are from China. According to Lim Wei Hung, executive director of South Alliance Minerals, the Malaysian company that owns a 40% stake in MCRE. Quote, the government needs to understand the geopolitical reality. We don't have full control. Finally, in terms of the technology, scrolling down, Howard Lee, a Malaysian legislator who chairs a parliamentary caucus on minerals, said Chinese officials are open to setting up a refinery in Malaysia that involves, quote, minimal, if not no, transfer of know-how. In exchange for minerals, China could share tech under, quote, black box arrangements, said Rare Earth Industry Research, a Chinese research group. Quote, Chinese engineers can be dispatched to guide operations at Malaysian plants, similar to China's model in African copper mines, it said. So that is the latest on Malaysia. Now, there's one more story here. This is Reuters via mining.com. Malaysia suspends rare earth tin mining operations after river water turns blue. And this is Reuters via mining.com. Malaysia has suspended operations at a rare earth site and 2 tin mines in western Perak State following an investigation into complaints that a stretch of a major river had turned bright blue, the Natural Resources and Environment Ministry said. Scrolling down, initial investigations found discharges at the rare earths mining site operated by MCRE Resources, which matched the color of the water in the river. Radiation readings at the site were also found to be as high as 13 becquerels, far above the 1 becquerel limit permitted under the project's initial environmental impact assessment report, he added. MCRE did not immediately respond to a request for comment. Now finally, turning over to Europe, there is an issue with aluminum scrap. We saw copper scrap become an issue in the last couple of months, where all of a sudden all the copper scrap was being bought up and smelters in Europe no longer had feedstock. And the finger was pointed at China by the EU. Now there is concern around aluminum scrap. We have an article from the Financial Times. EU plans to restrict aluminum scrap exports. Shortages have left Bloc's recycling industry fighting for survival. As it says, European Trade Commissioner Maros Sefcovic said on Tuesday that the growing leakage of scrap from Europe risks its sustainability goals. Aluminum producers say their recycling plants are idle as valuable scrap is sold to the United States and Asia for higher prices. Quote, we do not want to completely block aluminum scrap exports, Sefcovic said in a speech in Brussels. Quote, rather, we want to prepare a balanced measure that will allow industries using aluminum to access adequate quantities of this strategically important material at competitive prices in order to pursue their path towards decarbonization, fully in line with a circular economy logic. So aluminum scrap becoming an issue. Also a headline out of the Financial Times. EU plans mineral stockpile center to stop U.S. snapping up supplies. And this is by Alice Hancock and Andy Bounds. The EU plans to create a central body to coordinate the purchasing and stockpiling of critical minerals to stop the U.S. buying up global supplies from, quote, under our noses, the bloc's industry chief said. Stéphane Séjourné, the EU's executive vice president for industrial strategy, told the Financial Times that the EU had become collateral damage in a spat between the U.S. and China over access to rare earth minerals, which are crucial for defense and clean technologies. Scrolling down, Séjourné said that Brussels aimed to create a critical minerals center with dedicated funding to buy, coordinate European purchases, set aside stocks, and also to push companies to integrate more economic security into their supply chain. He said Europe was late putting together such tools compared with the U.S., which has invested in domestic miners and signed supply deals with governments. Quote, the Americans have a business department that buys stocks of critical materials before us everywhere in the world. They often buy them from under our noses, Séjourné said. And just a few more headlines. Britain unveils critical minerals strategy to cut reliance on foreign supply. That's Reuters via mining.com. Western allies seek to forge joint defense against cheap Chinese steel. That is the Financial Times. So it is not slowing down over here as critical minerals, natural resources, metals, and mining continue to dominate 2025's headlines. Coming up this episode, we have a wonderful interview with Michelle Smith, Vice President of Global Mining Practice at Syntax, and we discuss AI and how it's changing exploration, and you get a very practical primer on how to start implementing AI processes into your exploration company, courtesy of Michelle Smith. So a wonderful, informative interview coming up this episode. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. Turning to the website, Barrick shares surge as it resolves dispute with Mali. Big story. This is by a staff writer at mining.com. Barrick says it has reached an agreement with Mali's government to end their dispute, removing uncertainty surrounding the operation of its Loulo-Gounkoto complex in the African nation. Its stock surged. In a press release Monday, the Toronto-based gold miner confirmed that the Malian state had dropped all charges against the company and its affiliates and will return operational control of Loulo-Gounkoto to Barrick. The Mali government will also arrange for the release of 4 Barrick employees that have been detained for a year. In exchange, Barrick said it will withdraw its arbitration case against Mali, which it brought to the World Bank Dispute Tribunal in December after Mali's junta-led government blocked gold shipments from the Loulo-Gounkoto site. The announcement follows an earlier report by Reuters that the two sides had reached a verbal agreement to resolve their issues. Now, it's a little strange. I'm going to go to the press release here. Barrick Mining Corporation today announced that it has entered into agreement which puts an end to all of its disputes with the government of the Republic of Mali regarding the Loulo and Gounkoto mines. All charges brought against Barrick, its affiliates, and employees will be dropped, and the legal steps for the release of the 4 detained Barrick employees will be undertaken. Additionally, the provisional administration of the Loulo-Gounkoto complex will be terminated, following which operational control over the complex will be handed back to Barrick. This will pave the way for a constructive path forward. As a result of the settlement, keyword settlement, Barrick's subsidiaries will withdraw the arbitration claims currently pending before the International Center for Settlement of Investment Disputes, or ICSID. So it sounds like we're actually not getting clear information here on what Barrick is actually giving to the government. In a sense, it raises more questions than answers. Let's continue. The 3 days when BHP tried to crash a copper mining mega deal. This is Bloomberg News via mining.com. Last Thursday night, the world's biggest miner made a brazen attempt to gatecrash one of the industry's biggest ever deals, yet just 3 days later, the bid was already dead. BHP Group's last-minute proposal to buy Anglo American and prevent the smaller company from completing its $60 billion combination with Canada's Teck Resources has left investors, bankers, and rival executives reeling, especially because the commodities giant spent the last 18 months insisting it had moved on from its failed attempt to acquire London-based Anglo. The surprise move and near-instant capitulation have raised questions about BHP's strategy and its confidence in its standalone growth plans in copper, the metal viewed as increasingly critical by governments across the globe and in tight supply over the coming years. But the company had also drawn praise from some investors for its willingness to once again walk away rather than risk overpaying for the deal. The account of BHP's latest bid for Anglo American and its rapid reversal is based on conversations with a dozen people familiar with the situation who asked not to be identified because the information is private. Representatives for both companies declined to comment. For BHP and Chief Executive Officer Mike Henry, the attempt simply represented a last-chance attempt to negotiate a friendly deal to acquire a group of copper mines that it has long coveted, according to some of the people. Anglo's South American operations are some of the best in the business and were the key driver for BHP's failed attempt last year. Quote, "There's a general sense of now or never," said Teado Rodriguez Lourenco, a fund manager at Aberdeen Group, whose fund holds shares in both Anglo and BHP. Quote, "After the business combination, the complexity of acquiring Anglo-Teck will be much greater and would be a much bigger asset for any new bidder to try to acquire in its entirety." So Bloomberg News goes into depth on this entire story. The moral of the story is there's no deal. Scrolling down, by late Sunday night in London and before Australian markets opened, BHP issued a terse statement saying it had decided against a deal with Anglo after preliminary discussions. Under UK takeover rules, that means it's restricted from making an offer for the company for the next 6 months, except in specific circumstances. The terms BHP offered have not been made public by either side, leaving Anglo investors wondering what might have been offered for their company. Quote, "It would need to be quite a reasonable premium because the Anglo-Tech combination does offer upside in our view," said George Chevalier, a portfolio manager at Asset Manager 91 who owns Tech and Anglo shares. So BHP made a lot of headlines there, re-entering the discussion, once again trying for Anglo-American, but 3 days later is out of the picture. And continuing on, China starts $1.4 billion revamp of Mao-era African railway. This is Bloomberg News via mining.com. Zambia initiated a $1.4 billion overhaul of a key railway linking the southern African nation's copper region to a port on the Indian Ocean, in a ceremony that marked the first visit by a Chinese premier to the country in almost 3 decades. The launch of the upgrade by Zambian President Hakainde Hichilema was attended by Chinese Premier Li Qiang and Tanzanian Vice President Emmanuel Nchimbi. It follows a September agreement by the three nations to revamp a route originally financed and built with Beijing's assistance under Mao Zedong in the 1970s. Quote, "The Tazara Railway is a signature project of China-Africa cooperation," Li said in a speech in Lusaka, the capital, on Thursday. Quote, "China is ready to work with Zambia and Tanzania to let this railway carry hope, brim with new vigor in the new era, and provide more momentum for the development of Tanzania, Zambia, and Africa as a whole." Scrolling down, the line will compete with another, the Libido Corridor, backed by the U.S. and the European Union, which links the same copper-producing region of Zambia to an Atlantic port on Africa's west coast. Another headline, Ivanhoe Qatar to collaborate on critical minerals mining in Africa. That's by a staff writer at mining.com. And another headline, Lynas warns production shortfalls at Kalgoorlie after power disruptions. Australia's Lynas Rare Earths said on Tuesday it estimates a potential shortfall equivalent to 1 month's production during the current quarter at its Kalgoorlie facility in Western Australia following significant power supply disruptions. The world's largest rare earth producer outside China also expects the disruption at Kalgoorlie to affect production of finished goods at its Malaysian facility during the current quarter. The MREC material produced in Kalgoorlie is processed at the Lynas Materials Advanced Materials Plant in Gabang, Malaysia. Continuing on, MP Materials soars on Saudi Arabia rare earth joint venture. It's by a staff writer at mining.com. MP Materials has teamed up with the U.S. Department of War to form a joint venture in Saudi Arabia with Ma'aden, the kingdom's flagship mining company, to build a rare earth refinery. Shares of the company rose. The formation of this joint venture represents a, quote, pivotal step towards rebalancing the global rare earth supply chain and aligns with U.S. economic and national security interests, MP said in a press release Wednesday. So it just continues on all fronts here. Another headline, Pentagon lends $700 million to Vulcan ReElement for rare earth magnets. And this is Bloomberg News via mining.com. The U.S. Department of Defense agreed to lend $700 million to producers of rare earth magnets in a bid to increase domestic production of materials used in consumer electronics and weapons. The conditional loan package is made up of $620 million to Vulcan Elements and $80 million to ReElement Technologies to lift production of magnets made from neodymium, iron, and boron, the Pentagon said in a statement Friday. The Department of Commerce will take a $50 million equity stake in Vulcan. And finally, CATL aims to restart key Chinese lithium mine by early December. And we're seeing lithium prices start to perk up, as you're going to hear in metal prices shortly. This is Bloomberg News via mining.com. A key Chinese lithium mine run by Contemporary Amperex Technology is preparing to reopen as soon as early next month. The battery maker has formulated a preliminary plan to restart its Zhangjiawo mine by early December, according to people familiar with the matter, who declined to be named as they aren't authorized to speak publicly. CATL didn't immediately respond to requests for comments. Scrolling down, the fate of Zhangjiawo, owned by the world's biggest maker of batteries for electric vehicles, has fixated the industry in recent months. Production at the mine was suspended in August after CATL failed to get an extension on an expired permit. The mine is expected to account for about 3% of global lithium production. Very interesting there. And finally, gold exports from Switzerland to China drop in October. And you can read the whole story on mining.com. Those are your news stories. Now, let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market. For context, the U.S. 10-year bond is yielding 4.04%. That is down 0.06% on the week. The UK 10-year gilt is yielding 4.54%. That is 0.02% higher on the week. The Italy 10-year bond is yielding 3.45%. That is 0.01% higher on the week. And France's 10-year bond is also yielding 3.45%. That is unchanged from a week ago. Germany's 10-year Bund is yielding 2.7%. That is 0.01% higher on the week. And once again, the big standout is Japan's 10-year bond, which is yielding 1.8%. And that is 0.06% higher on the week. And finally, China's 10-year bond is yielding 1.82%, and that is up 0.01% on the week. So we continue to see Japan just almost cross the threshold of yielding more than China's 10-year bond, which seems like it will be a landmark in the bond market. Continuing to precious metals, gold is trading at $4,124.50 per ounce. That is $84 higher on the week. Silver is trading at $50.86 per ounce. That is 73 cents higher on the week. Platinum is trading at $1,547.80 per ounce. That is $11 higher on the week. And palladium is trading at $1,408 even. That is $5 higher than last week. Turning to industrial metals, copper is trading at $4.98 per pound. That is a penny lower than last week. Iron ore is trading at $104.42 per metric ton. That is 47 cents higher than last week, so edging slightly higher. Aluminum is unchanged at $1.28 per pound. Lead is lower at 90 cents per pound. That is 3 cents lower than last week. Nickel edges slightly higher at $6.67 per pound, but still well below $7. So nickel continuing to languish. Tin is trading at $16.74 per pound. That is 5 cents higher on the week. Cobalt is unchanged at $22.03 per pound. Lithium is trading at $12.97 per kilogram. That is 85 cents higher than last week. Perhaps that is why CATL is looking to open that mine. So lithium continues to gather momentum. Uranium is trading at $75.85 per pound. That is $2 lower than last week. And zinc is unchanged at $1.36 per pound. Zooming out, we see precious metals continuing to recover, notably gold at $4,124, silver above $50 per ounce, while industrial metals edge sideways, with the exception of tin and lithium both showing some strength, and those are your metal prices. Coming up, I'm very pleased to welcome Michelle Smith to the program, Vice President of Global Mining Practice at Syntax. We discuss how AI is changing exploration and practical ways that exploration companies can begin to implement AI in their business. It is a wonderful discussion. I hope it's useful, and I also hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome to the Northern Miner Podcast, Michelle Smith, VP of Global Mining Practice at Syntax. Michelle, welcome to the show.
Thanks for having me, Adrian.
It's a pleasure to have you, Michelle. Today we're going to discuss, I think, one of the most interesting areas in the mining sector, which is how AI is going to change exploration. Previously, we seem to have this strategy of getting these very expensive drills. You drill a hole that costs you tens of thousands of dollars, and it just seems like an industry or a practice and a sector that is ripe for disruption. Am I right?
I think to a degree, yes, absolutely. I see it more as a facilitator or an additional tool in the toolbox for exploration. They're still going to have to do their surveys. They're still going to have to do some drilling, but they're going to be able to collect the data, be able to get analysis quickly with all the data that they've collected. It's definitely going to help them in sending out reports to the various investors that they're looking for.
And so, as you reimagine exploration, like, is it part of a suite of tools that are coming online? Perhaps new sensors or new ways of scanning the earth beneath the surface, beneath the crust. In a sense, I guess what I'm asking you is, how is exploration changing in, say, 2025?
So I think there's lots of opportunities out there that the technology industry is exploring from a mining perspective using AI. So do you need to actually physically be out there doing the surveys, or can you use the technology that comes with AI? And then there's the next level of once you have the data, and the back office people that are computing the information, putting the reports together. I think that's where you're going to see more advantage with AI. You're still going to need people to go out to the sites and collect the data. I know there's still, again, we have the geothermal technology and how to leverage AI with the solar and sonar capabilities. And I think that there's a lot of advancements going on in that space. Definitely some conferences coming up in the near future. In Vancouver, there's a mining tech conference. We'll see a lot of technology innovation there.
Okay, very interesting. So, in a sense, the way you're seeing it right now, and it stands to reason, the way AI is really being applied is once you have the data, it's a lot easier to sift through. In a sense, it's mostly a data processor that kind of helps you more efficiently, synthesize the takeaways from the data. Is that accurate?
Yeah, that is, but it's also, you can give it a persona. So we have what we call AI bots, and you can give it a persona and ask it to format a presentation or your documentation or your policy documents in whatever voice you want it to be in. It's going to collect that data and then produce it based on the audience that you want it for as well. So the biggest advantage, I think, is that, you can do it in multiple iterations to get it to sound and feel how you want it to. And on top of that, you're not having to exert your energy going back into a bunch of Excel files, going and looking on your hard drive and your network for all the different reports that you've done. If you're collecting your data and it's all in the back end system, then that AI bot will generate a report for you in your persona for you.
Okay, excellent. And this is beyond the office, I assume. Like, I
Oh, yeah.
imagine, right? Like, if you're drilling, I guess we're still going to use the drills, but maybe you're getting information in real time, so to speak, and then
Yeah.
that information can be, crunched.
Yeah. So you can collect the data. And what I would say is the younger generation are very much into technology, and they all have apps and phones and tablets with them. And as you're collecting the data, you can just be reading it into a system, right? Reading it into your application. Then it's collecting it, putting it into whatever format you want, and you can generate a report right there while you're standing there, because you're not going to have to go in and look for all the historical data. And you can be comparing it as you're collecting it right on the spot. And I imagine that AI, from a drilling tool perspective, will eventually start to be able to collect the data right from your tool and put it into your backend system.
Now, maybe there are some exploration companies listening. It is the Northern Miner podcast.
Hmm.
Our bread and butter, as I like to say here, are exploration companies. And maybe they're trying to figure out, they probably talked to different people at trade shows, heard from friends. I guess my question is how difficult is it to implement AI? I mean, it all sounds fine and good, but in a sense, how practical is it to implement this technology?
Yeah. What we at Syntax have told our customers is don't try and boil the ocean on your first attempt. So start in small bits and pieces. Pick something simple that you want to start with, get that first AI use case out of the way, and then grow from there. It can be as simple as, getting an AI bot set up within a few weeks and then growing from there. But there are companies like our own that we start out as a certain type of technology and system implementation partner, but with AI, we've had to develop an entire technology department just to focus on AI for our customers. So again, you should start simple and grow from there.
Okay, interesting. So you mentioned, say, it can make presentations. I mean, what are some of the main practical applications of
Yeah.
this technology? So there's presentations, but what else can it do?
Yeah, I mean, you can generate policy briefs, government documentation in the format that the government wants. Also, a lot of analytics. So, comparing balance sheets. Finance is finding this to be very helpful. You can use it in your backend, in your operations with the technicians and your mechanics, wanting to enter data while they're working. They're not having to go to a computer and enter it. They can speak and collect the data. I mean, in mining, especially junior mines, exploration mines, there's so much opportunity to leverage AI.
Okay, excellent. So how big of an impact do you think this is making? Like, is this, I don't know if we can put numbers on it, like 10x efficiency, and I assume efficiency is one of the things we're getting. Like, in a sense, can you describe what the impact is? Like, how is it changing, the business, so to speak, of a
Yeah.
exploration company?
Yeah. I was speaking with one of our customers the other day when we were having a dinner with some CFOs and CIOs. And he mentioned when we got talking about AI that it's going to make their employees even more knowledgeable and smarter about their industry. So, the way that AI works, you have to prompt it, you have to ask specific questions, you have to get to know how to work with it to get good data driven responses. And with that, it forces you to understand, well, what your job is, what your company is, what your business is. So, one, it's, increasing the intelligence of the employees, but it's also allowing employees to spend time on value added activities where, your company, you need to have your equipment out. You can't have a lot of downtime on your equipment. If you're spending a lot of time on administrative work, that's taking the technicians off of the equipment. So I think, do I know what the value from a quantitative perspective is? I don't think there's enough data for that yet, but we're definitely seeing the value from the labor pool being able to work on more value added activities and not on like fingers on keyboard activities.
Okay, excellent. Now, in terms of the whole employment side of it, it's kind of an
Mm,
interesting issue. I mean, from a societal perspective, there's concern. Some people are happy about it. In a sense, my 5-year-old self is quite happy if we don't need to work as much. But there is concern that, from a societal level, that AI will, all of a sudden there won't be enough jobs. I think even Bill Gates talks about how many of the jobs are going to be basically substituted or replaced by AI. But interestingly, in the mining sector, it's almost kind of a reverse issue because there's not enough talent, really. There's not enough people taking geology or geological engineering. So, how does this factor in? I mean, in a sense, is there a kind of employment or employee efficiency, dare we call it, in regard to this?
Yeah, so I think that's twofold. One, there's the side of AI that, the younger generation, the new graduates, they want to be involved with the latest technology. They want to work with the shiny objects, and AI is one of those areas, as well as, machine learning. So it's attractive to the younger generation that they're going to get to work on the newest technology in their mining company if they deploy it. The other side is that, like you mentioned, there's a demand for miners, geologists, engineers, finance, IT, all in the mining industry. And, people are having to work, 50, 60-hour work weeks to keep up with the volume of work. And hopefully bringing in AI will take some of that weight off of them, especially in areas like machine learning. being able to train a bot to do a daily task that maybe, you know, can take pressure off of somebody working that could go and focus on the more value added activities. So I think allowing employees to work a more balanced work week will come from adding in some AI bots and machine learning.
Okay, excellent. And from an investment perspective, I assume investors would be more excited by a company that's, employing AI. I assume most of them are on certain levels, right?
Yeah.
But if you have a sophisticated implementation of I suppose that would make you more attractive from an investment perspective.
I would think so. I think investors want to know that they can trust the data, that you're a forward thinking mining company, and that you're investing in your operations. So I think having reliable data and, I think in the past, historically, a lot of time was in that machine learning space. So a lot of companies did implement machine learning even 10 years ago. They were starting to do that through optical character recognition in finance and AP. But now it's taking it to that next level with the AI bots that you can actually have them working 24 hours a day doing analytics for you. So I definitely think that investors want to know that you're forward thinking, you're investing in your company, not just from a boots on the ground perspective, but from a technology perspective as well.
And in terms of adoption, are you able to observe from your vantage point? I assume some, exploration companies are adopting at a quicker pace than others. Like, are you seeing the full range? I assume everyone on a certain degree is using it. Maybe it's just ChatGPT to help for your government report or whatever the case might be, format it properly. Are you seeing a kind of variety though? Like, is there anything that you observe being in the position that you're in at Syntax? What can you tell us about, the variety of progress and adoption by exploration companies?
Yeah, I think the exploration companies are at the right time to be adopting AI because they're so young. They don't have a lot of data. So it's the right time, right? As they're collecting their data, they're starting right from scratch. So they've got the best opportunity to leverage AI. And if you're willing to make a bit of an investment, because it shouldn't be a big investment right off the bat to get AI up and going for you. The larger mining companies have years, decades of data and it's overwhelming for them where to start with AI. They want it, they know the value of it, but again, there's so much data out there. How do you get going? Whereas those exploration junior mine companies, it's the right time. They're getting in right at the start with their data.
Okay, that's such a great point. In a sense, you're saying, set the table properly so that in 10 years, when you're drowning in data, you're already off to the races and you're not trying to figure out how to manage and categorize and having meetings on
Exactly.
taxonomy. In other words,
Exactly. Yeah.
so just kind of curious, what kind of challenges are you running into that maybe you wouldn't expect on this front? Maybe with AI, especially initially, or perhaps even right now, there's a sense that, oh, it'll just solve everything.
Mhm.
What kind of challenges are you seeing in this whole domain of AI and exploration?
In the exploration phase specifically, I think it's just a little bit of fear or lack of understanding of how AI works and understanding that it's not there to take people's jobs. It's there to be another tool for them, help them be successful, help them gain investors, get their government funding and approvals. So I think it's that a little bit of fear, but there's also just a lack of understanding of what AI is because it's a pretty wide open, field. There's so many different aspects of AI. So, trying to come up with a simple use case right off the bat that would benefit them is really the key of trying to focus in on specifically what it is that you want to achieve using AI.
And so, how should companies start then for those exploration companies that are listening? Do you have any advice for them or how to start, getting going and setting the table properly?
Yeah, so a couple things I can think of is one, figure out what your first use case is. What is it that you want to use AI for? Then it's determining what type of AI it is, and then finding a good partner that can help you quickly deploy it. And It doesn't need to be a large technology firm. I mean, you could probably find even an internship or a student at a university who wants to get in and have an opportunity to develop some AI. So the first thing, have your use case and start from there.
Okay, excellent. And how does Syntax do that then? How does Syntax help companies with AI?
Yeah, so we have a technology department just started in the last year and a half. I already have 50 members in that team. And again, we work with our customers to build their use cases of what they want to focus on. And then we provide a design and a cost for them and partner with them to help build it. I would say we also want to work with them to make sure that they can stand on their own. Once the first bot is deployed, then hopefully they can, build more on their own.
Okay, and just in terms of use case, I mean, could you give us an example of a use case?
Yeah, so right now we are specifically for mining. My team is building a financial bot that takes your financial statements month over month, year over year, quarter over quarter. You just give it some prompts of what you want to compare, if there's specific cost centers, if you want to see it by your hierarchy, which mining operation it is. And it'll produce an entire financial statement for you, and it'll highlight the areas of, focus for the finance team to look at where there's, big swings from the previous month or quarter or year that then they can focus in on and spend their time doing their analysis more deeply into that. But you start with the simple and then you just keep digging into it, asking it more questions. And the bot just keeps giving you more data and more information in the format that you want it to come out in. If you want it in Excel, if you want it in a PowerPoint, what voice you want it in, who's the audience that you're presenting it to. And again, it's specific to mining, so it looks at a mining cost center hierarchy and chart of accounts.
Okay, great. So just a couple more questions here as we wrap up, Michelle. So where do you see this going? Do you see a trajectory here of how this technology might develop and really where you see it might help, where right now it's not, but maybe in a year or two it could?
Yeah, I definitely think that, like you mentioned, in the exploration junior mine, there's lots of opportunity for AI to help them with all the data that they're collecting, being able to generate documentation for government, for investors. And then for the larger companies, again, I think a lot of back office activities in the finance area, being able to do analysis on the data, documentation that they have. Again, as I mentioned, the CFOs for several of our mining clients have put AI as a mandate. I haven't gotten into what their use cases are yet, but I'm going to guess a lot around data analytics, comparisons, especially in the maintenance. I think there'll be a big interest in the maintenance area as well.
Okay, very interesting. And finally, is there anything we haven't discussed that you feel is pertinent or relevant to this discussion?
For me, the biggest message is not to be afraid of AI. Understand that it's a tool that covers a lot of areas. See it as another tool for you to be successful in your operations. And especially, with all that's going on with mergers and acquisitions and investing, having access to an AI bot that can quickly do some analytics for you, provide some data, some quick information that you'll need is going to be really important, I think, for moving quickly. As we're seeing in the mining industry right now, things are moving quickly. And so having access to the data fast will be beneficial.
Michelle Smith, VP of Global Mining Practice at Syntax, thank you for joining us and sharing your insights and perspectives on this week's Northern Miner podcast.
Thanks, Adrian.
Thank you once again to Michelle Smith for appearing on this week's episode of the Northern Miner podcast. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.